it is hard to say how this war is going to play out. But we think that when you look at, for example, the two most likely scenarios is that this war ends quickly and it's very soon, as President Trump said yesterday, or maybe instead we see the Iranian government deciding to extend the war and keep it running. So maybe the decision to elect Supreme Leader Muqtada Khamenei
Right.
signals hardlining, and this means maybe Iran goes on, but it's unclear at this point how much
Right.
damage Iran can do.
But if we see now these headlines, and folks, Mark Champion, I should mention, with an essay, I'll get it out on LinkedIn and Twitter here on the martyrdom that we see in Iran. Francisco Blanch, how easy is it for both sides to go after the refinery of petroleum products in the broader Middle East?
I think it's relatively straightforward, and Tom, so this could be very, very damaging. Some of the world's biggest refinery operations are indeed in the Middle East. Saudi Arabia is probably the fifth or the sixth largest country when it comes to global refining capacity. Iran is around that level as well. They both hold between 2.5 and 3 million barrels a day of capacity. So they're very, very large. There is also, as you pointed out, Ruwais in the UAE, Bahrain, the refinery in Bahrain, the Babco refinery has been hit and shut down. Ras Tanura shut down. Israel struck Iranian refineries in Tehran over the weekend. So there is at least over 1 million barrels a day of refining capacity that's idle today.
Let's talk about storage capacity, if you wouldn't mind, Francisco. I mean, we know it's filling up rapidly. We've seen production cuts in Iraq, Qatar, Kuwait, et cetera. You know, if we take Trump at his word and assume this is merely a 4 to 5 week exercise, just how long will it take at that point to bring these production facilities back online?
So I think it depends what you're looking at. For crude oil production, you're looking at 1 to 2 weeks. Aramco recently announced they can bring back production in days. So again, I think the scenario 1 to 2 weeks is reasonable. If Hormuz is operational and you can flow the usual 30 to 40 ships a day through it. But then refining takes a little longer. It could be several weeks to get refineries back up and running. We're looking potentially as much as a month or a little over a month. And then LNG facilities, now we're going to be looking at 1 to 2 months.
That's right.
Right? And then once you get to aluminum, right, which has also been partially shut down, we've had a large amount of aluminum smelting capacity being curtailed across the region. That could take several months, maybe 6 months, maybe longer, and will cost a lot of money to restart those aluminum smelters.
So, Francisco, if I'm hearing you correctly, we're at least in for something on the order of a 3-month, kind of period of elevated energy prices. And, from that perspective, I need to ask you, from a terms of trade perspective, I guess, which countries effectively are the winners and which ones are the losers?
Well, it always goes down to about the same way, right? I mean, the U.S. is now a net energy exporter. So any uplift in energy prices is money moving for the most part from New York and California to Texas and Oklahoma and Louisiana. On the other hand, for Europe, any spike in energy prices has historically been or historically resulted in a major economic downturn, whether it is the 2008 spike in oil prices, the Libya civil war and the Arab Spring, which resulted in the European sovereign debt crisis in 11-12. More recently, the Russia-Ukraine war and the spike in 2022. So for Europe, if prices spike, I mean, at these levels, it's probably manageable. But if we spike to $120, $130 a barrel, global gas spikes sharply, this could be pretty painful for Europe. And also, of course, potentially for China. Although China is better prepared, has already a very large trade surplus, and has built enormous stockpiles of strategic energy reserves.
Francisco Blanch with us, folks, with the Bank of America, just wonderfully global and encyclopedic on these petroleum products. We do this with futures, a little redder than green screen right now. The VIX 24.64. We're 29 minutes from a scheduled press conference with the Secretary of Defense and the Chairman of the Joint Chiefs of Staff. We've now got an image in our studio at the Pentagon press briefing room with the flag of the Secretary of Defense, and to the right, the flag of the Chairman of the Joint Chiefs of Staff, General Kane. Francisco, what are the degrees of freedom that any president, or frankly Brussels, has to manage the price of oil? How does a grizzled pro like you respond to politicians saying we can fix this?
Well, once the missiles and the drones start flying around, it's difficult to predict how things will play out. But one thing that politicians can do is release those strategic reserves of oil. Now, that helps with crude specifically. It doesn't necessarily help with petroleum products, which is why your question on refining is so important. And also, of course, we've seen the Chinese effectively stopping on an emergency basis the export of gasoline, diesel, and jet fuel out of the country. Remember, China, together with the U.S., has the world's largest refinery toolkit. So that's also tightening the market. So politicians are kind of looking at home. And again, in the case of the U.S., the government could also, for national emergency purposes, could take some significant steps beyond petroleum reserve releases. In Korea, we've seen price caps, which are always a little dangerous. They can end up costing a lot of money to the taxpayer. We could also see, for example, things like the waiver of the Jones Act in the U.S. or sanctions waivers, as the U.S. has recently issued for India to purchase Russian crude. So there's a lot of things they can do to relax tensions in the energy market at this point.